I'm Nikki Larkin. I'm the Managing Director and founder of Gorringe Accountants. So, as usual, I've done my annual viewing of the Chancellor. So today it was the lovely Jeremy Hunt, and he presented his autumn statement. So I've been through the detail, and what I've done, as always, I've picked out the most relevant points for our clients. So those small and medium-sized businesses that want to know what things have happened in the budget today whilst you're busy running your businesses, I've got the down low on what are the main things that have happened today so that I can share these with you. So here are my key points. So the things that I'm going to be going through, there's not too much substance that is relevant to businesses. So I'm going to be talking a little bit about gross domestic product, about the current forecasts, how the taxes are being split and what they look like going forward, how much they are, and also a little bit on inflation. But the key changes that I want to talk to you about today are national insurance changes, which are some really big changes, which are very important for you to know. The changes to national living wage, capital allowances, research and development reliefs, and also business rates. So not massive amounts of things. There was, just to be clear, there were no changes on income tax. I suspect that they will be being saved for the April budget. I'm expecting to see them then. And then also the other thing that there was not a whisper of was capital gains. Not necessarily expecting much of a change there, but it's just something that is obviously all very much always in the forefront of business owners' minds, capital gains. And obviously we are expecting changes when there is a change of government. So we wondered if there would be some sort of mention, but there wasn't. And likewise, there is no mention on inheritance tax today. So looking at the gross domestic product forecast, what I'm showing on the screen there is, so back when I did the presentation earlier in the year, when I was looking at the latest budget in March, so the March budget that comes out, there has been a slight increase of the forecast. Now, there is the argument that a lot of this is due to the base cost of products and services. So that has inevitably, if people have all been putting their prices up, of course, that's ended up putting the actual receipts up. But nevertheless, it's still a positive. That's sort of showing, you know, a fair bit of growth. But however, for next year, just to be clear, the Office for Budget Responsibility have been forecasting that the overall growth for next year has been, it was showing a two-digit growth for next year. That's been brought down to 0.7%. And I'm sure any of you that know just monochrome statistics, that's only now got to be a very small swing to end up into recession. But we're all positive business owners, and regardless, we're all looking for what growth we can find. But just to be aware, it's the overall isn't super. Okay, so what I thought also would be interesting is to see what the increases of tax receipts are, and also where they all are, because often you hear a lot about capital gains or inheritance tax, but where are they actually making most of their money from the government to spend on the public services? So here you can see at the moment it's forecast taxes to increase. In fact, at the moment the tax forecast increase to be up to about 37% of GDP, which is a really high ratio, and there's been a lot of talk about that today. But as you can see here, the main receipt comes from income tax, Next is VAT. There wasn't really anything said about VAT. Again, I think that's going to be another one that could be a big player in March. And corporation tax. We all know that the corporation tax rate has gone up to 25%. Still being tried to spin as being one of the lowest areas, which, yes, if you compare it to Japan and US, it is a bit lower than them. However, if you look at across Europe, there are still quite a few countries that have got much lower corporation tax rates, which is why a lot of you probably also have sister businesses in Hungary or one of the other countries with much lower corporation tax, might be having some of your business now based there. Okay, so the other thing, which obviously everybody's been talking about this year, is inflation. We know it. We've personally been affected by it. Your employees will certainly have been affected by it, and therefore, this has been caused a lot of pressure for you to increase your wages, because obviously their net wages are just not covering the costs like they used to. So you can see in there, the biggest impact there is people's gas and electricity bills, which obviously there was a small modicum of relief given. The various different allowances were given. However, ultimately, pretty much everybody's electricity or gas bills have gone up. The other things, of course, we all know that are food bills. Those of us that try to stick to a budget of only spending a certain amount each week see that the number of bags that they're receiving is smaller and smaller, because it just doesn't go so far. And of course, if you've got rent to pay or mortgages, if your mortgage has come out of its fixed rate period, you'll have been harshly hit. And of course, most landlords are trying to pass along their increases to their tenants as well. So everybody's been hit from everywhere, which is why you can see it's hit over 11% at one point. Now it is gradually going down into the 6 to 7% range. It is continuing to go down, and hopefully it will be going down to the more modest sort of 2% for the next 2 years, we hope, which will be a welcome relief. But of course, just to be clear on the statistics, that's of what continued inflation is. The costs won't have gone down. It's just their increases will stop going up so high. Okay, so going into the things that were actually really announced today, huge change for Class 2 national insurance, as the fact that it's actually been abolished. There is the option still to do voluntary Class 2 national insurance contributions if you don't earn very much, and you wouldn't get the automatic stamp for it. However, just to be clear who this affects, so Class 2 national insurance is relevant to people that either run their businesses as a sole trader or as a partnership, because as partnerships you also get taxed personally. So those are the people that it affects. It's just slightly over £3 a week is what you're paying on your Class 2 national insurance, depending on what profits you're having. So it's great. It's a decrease for you, but what it's actually doing is less than £200 a year is what it's saving you. So great, but it's not going to necessarily compensate for other things. The next one is the Class 4 NI decrease, and this was a bit of a surprise because it keeps on going up and down all around about, but that has going down from January to 8%. So look forward to all the software manufacturers trying to fix that in for partway during the year. But yeah, so that's quite significant, because that could be quite a few £100s depending on your profits for your businesses. Again, only affected if you're running your business as sole trader or as a partnership. It's not going to be relevant to you if you run your business as a limited company. Finally, this will affect all of you that have employees, or if you, in fact, yourself are run as an employee in your limited company. So again, this will affect from your January payroll. Your employee national insurance will decrease from 12 to 10%. Now, of course, apart from your personal salary is the only way that you'll see it affect in your business, because this money is passed across to your employees. There was no mention on employers' national insurance. However, what hopefully it will do, because it will be, quite a bit into each person's pay packet, their net wages will increase each month. Hopefully it will reduce a little bit of the pressure on increasing salaries, but obviously it depends on your sector and where they are. But overall, my signs that I've been seeing amongst my clients and across the general economy, there's been huge amounts of stress on wage inflation for last year and for this year. I'm actually expecting there to be much less pressure for next year, and actually it will be more because just more people available in the market, and also there is a lot of big businesses are cutting staff, so there just seems to be a few more people in the market, so there's less wage inflation. Of course, in certain sectors there are still shortages of certain skills, so you if you are stuck in one of those, you could still be massively impacted by wage inflation. But as always, you've got to do your sums really carefully for any salary increases that you give to your staff to make sure that your business can sustain them. The next thing is national living wage. So again, essentially should affect every employer. Of course, not all employers will have staff that are on national living wage. A lot of staff will be much higher than that. However, if you've got staff that are doing, say, a 37.5-hour week, what that means is you've got to be paying your employees at least, like when I worked out yesterday, it was about 22,300. So, that's going to be your starting salary for your staff. Obviously, if you've got young people or apprentices, because it's for people over 21, you could pay less. But a lot of employers tend to ignore now the 21 and will just be going, well, actually, if that's what national wage is, that means that for all my employees, I'll tend to have that, make sure my starting wage is not lower than that. It, again, depends on what sector you're in, because some sectors are easier to pay less or, want to pay less, but it really depends on you and your business and your sector. There are increases for young people and apprentices, so do bear that in mind. Hopefully your payroll provider, if you're doing your payroll in-house or with an external provider, obviously if you're doing it with our payroll team, they will be made aware of these changes and make sure that they spot any clients that aren't increasing their wages at the right time. But pretty much people that have staff at that level usually know, and so make sure that they increase every time. Now, this isn't necessarily a new announcement, but it is an announcement of a permanent continuation of this. So in the last budget, it was announced about it's possible to now expense what they're calling their full expensing. It's a tinkering really of capital allowances, but very significant tinkering. So whereas it used to be that There was a certain amount of capital allowances that you could claim full allowances for, you know, like the annual investment allowance. There, it kept on changing around. For a while it was 1 million. Sometimes it was smaller, sometimes it was higher. What they're essentially now doing is they're calling it full expensing, but essentially you're getting 100% allowance for most main rate assets. So most plant and machinery, you will get that. There will be some long-term assets or special rate assets that you can only get 50%. But the point that from the budget today is that it's going to be made permanent. Of course, who knows, another government may change it, but you know, at the moment they're assuming that it's going to be made permanent, so that hopefully that can give some stability to businesses when they're budgeting and producing their 5-year plans, because they will then have more of be able to budget more clearly of what allowances they will be allowed. But that's obviously a very welcome addition, because it's essentially giving you your tax allowances earlier, rather than having to wait for the gradual write-down allowances. Research and development. So the headline is there's going to be reform, which we talked about last time. You know, that there was a big consultation on it. Essentially what they were going to be doing is the research and development expenditure credit and the SME schemes are going to all be merged from April 2024. Not quite clear as yet what that actually will look like, but obviously as soon as I have fuller details, we will issue a longer video specifically about that. I probably will get one of our tax guys to give you a detailed brief on that. However, I just do want to make everyone aware of this. So there has been a much higher increase on checks on R&D claims. Now, some of those are absolutely legitimate checks, and sometimes, you know, people are inadvertently trying to claim for something which might be in a grey area, and HMRC are saying, well, actually, we're deciding that isn't a new R&D that you can do it and therefore claim. But just be aware, if you do have a check into your R&D claim, don't necessarily just accept the initial HMRC decision, because there is some you know, I've seen some cases where certain HMRC officers have been rejecting claims, but then when they've actually been given more detail or challenged or got them to read certain sections, they are actually saying, oh, actually, yes, no, we do accept that this is a legitimate claim. But, you know, it's always, whatever you're doing, remember, on your self-assessment corporation tax returns or your self-assessment personal tax returns, remember it's self-assessment. So yes, initially it's accepted, but you are open to check or inquiry for a period of time. So just do always remember that, you know, if you do think that anything's grey area, be prepared that you may have to return the relief at some point if it's not allowed. We utilize some expert R&D consultants. That's all they do, and they will be able to give you a lot more advice on that to make sure that you have a lot more certainty in making sure that what you're claiming for, that you're not going to lose again later, because that would be the worst. I hate to see that for a client, to think that they're going to get something and then have to give it back or not receive it. Now, finally, business rates. This may not be relevant to everybody, because either they might be have a very large building, or be in serviced offices, or even run their business or work from home, as more and more businesses are doing nowadays. But if you are a business in a office or a warehouse or factory, whatever it might be, that's claiming for small business multiplier, just to make you aware that that is being frozen for 4th year. So that's the 49p in a pound. So that's good news. So hopefully that if you qualify for that, you either got reduced rates or you may not even have any business rates at all. Also, additionally, the 75% reduction for retail, hospitality and leisure, which again is not for everyone, but for the relevant businesses that do qualify, that, so you'll already know if you're already getting that, and if you are, then it's being extended for one more financial year. So I hope that was useful for you. As always, I'd be delighted to take any questions. So please do, send me questions either via YouTube, LinkedIn, via our website. Lots of different ways you can send me the questions because we're on so many different social media, or email me directly at nikki.larkin@gorange.email. I'd love to hear from you. Love to hear your comments. We're also, of course, as always, offering our clients a one-to-one meeting to discuss how the budget is affecting their business, which will either be with myself or our head of tax. So please do utilize that, because we want to make sure that you are fully aware of what's happening, so that you don't have any surprises and that you are able to budget and plan for your business really well, to help to make it continue being profitable and to continue with your growth. Thank you.